Good afternoon and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at Market Site, we have Charlie Brown. He's with Nasdaq's Markets Intelligence Desk here for the midday market update. Charlie, thank you so much for joining us at Market Site today. Now, what are some of the macro themes that you're looking at driving today's market action?
I think it's similar themes to what was affecting the market yesterday. Continued progress on trade talks with China, and also continued progress amongst government and Congress with President Trump in terms of funding the budget.
Right, so it seems more likely that they're going to come to a deal?
It does seem likely that they're going to come to a deal. Not specifics have been laid out in the marketplace, but at least the rhetoric has been positive overall.
All right, and what about the market internals? We're hitting up against some very key levels here.
We are. The S&P 500 is fast approaching and crossing over its 200-day moving average at about 2750. That is seen by a lot of the market participants as a key level. Now, it's one thing to cross over it, but it's another thing to sustain over it. So a lot of the pundits and experts are looking for a sustained level of about a 10-day over that period.
All right, so for 2750, if we're able to cross that and move beyond it, what's the next level that they're looking to break?
The next level looks to be about 2775, and that's a short-term, another resistance level.
The market likes round numbers, doesn't it?
They do.
All right, and what about the effect from the January CPI? Let's take a look at some of the data that came out this morning.
Sure, the CPI number came in as expected, basically. A month-over-month basis, it came in at 0.0. And the core CPI, which is what the Fed looks like in terms of gauging inflation, came in at 0.2%. So that was a calming effect to the marketplace. It looks like inflation is right where the Fed wants it at 2%. And it also reinforces the fact that the Fed backing off on their hawkish stance on raising rates and sort of ratcheting back things has proved them to be wise.
Right, I mean, and that's been such a key driver in the market since the December low. We've nearly recovered and moved beyond what we had lost there, and it's really because of the Fed and how the perception of liquidity and with the balance sheet is being perceived.
Absolutely. Now the Fed is seen as being in line with where the market is, and everything is on a harmonious basis at the moment.
All right, well, that's good. My 401k appreciates that for sure.
As do mine.
Charlie, thank you so much for joining us at Market Site, and thank you for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.